This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's crude oil imports rebounded in July from a six-month low as state-backed refiners ramped up output after returning from maintenance, though independent refineries slowed restocking amid probes by Beijing into trading and taxes. China brought in 41.24 million tons of crude oil last month, equivalent to 9.71 million barrels per day. BPD data from the General Administration of Customs showed on Saturday. That compares with 40.14 million tons in June and 51.29 million tons in July 2020. In the first 7 months of the year, China, the world's top crude oil importer, took in 301.83 million tons, or 10.39 million barrels of oil per day, down 5.6% from the corresponding period last year.
India will launch a 110 billion rupee, $1.48 billion, plan to boost domestic oilseed production to make the country self-sufficient in edible oil, Prime Minister Narendra Modi said on Monday, a move that will cut costly vegetable oil imports. India is the world's biggest vegetable oil importer and spends an average of $8.05 to $10 billion annually on edible oil imports. The country produces less than half of the roughly 24 million tons of edible oil that it consumes annually. It imports the rest, buying palm oil from Indonesia and Malaysia, soy oil from Brazil and Argentina, and sunflower oil, mainly from Russia and Ukraine.
Moving on to the top news in the energy sector.
The United Nations Panel on Climate Change told the world on Monday that global warming was dangerously close to being out of control, and that humans were unequivocally to blame. Already, greenhouse gas levels in the atmosphere are high enough to guarantee climate disruption for decades if not centuries, the report from the scientists of the Intergovernmental Panel on Climate Change (IPCC) warned. In other words, the deadly heat waves, gargantuan hurricanes and other weather extremes that are already happening will only become more severe. UN Secretary-General Antonio Guterres described the report as a code red for humanity.
Oil prices fell by almost 3% on Monday, extending last week's steep losses on the back of a rising U.S. dollar and concerns that new coronavirus-related restrictions in Asia, especially China, could slow a global recovery in fuel demand. A United Nations panel's dire warning on climate change also added to the gloomy mood after fires in Greece have razed homes and forests in parts of Europe suffered deadly floods last month. Brent crude futures fell by $1.87, or 2.6%, to $68.83 a barrel by 13:30 GMT after a 6% slump last week for their biggest weekly loss in 4 months. Next, we have the top news in metal markets. China's copper imports in July fell 1.0% from June, declining for a fourth straight month. Customs data showed on Saturday, as high prices, the release of state reserves and increased scrap metal inflows kept buying interest at bay. Imports of unwrought copper and copper products into China, the world's biggest copper consumer, were 424,280.3 tons last month, the General Administration of Customs said. That was down from 428,437.5 tons in June and well below the record high of 762,211 tons in July 2020. Activity in China's copper-intensive manufacturing and construction sectors expanded at a slower pace in July amid high raw material costs and extreme weather. The government also sold off 50,000 tons of copper from state reserves in a bid to cool prices.
Dalian and Singapore iron ore futures slumped on Monday, extending last week's losses, pressured by prospects of improved supply and weakening Chinese demand. The most traded iron ore for January 2022 delivery on China's Dalian Commodity Exchange ended daytime trading 4.4% lower at 852 yuan and 50 fen, $131.67, a ton, after earlier hitting 845 yuan, the lowest since April 1. The steelmaking ingredients most active September contract on the Singapore exchange was down 4.3% at $160.70 a ton by 0712 GMT.
We will now look at the top news in the agricultural sector.
Russian wheat prices rose last week on strong demand from importers and domestic buyers as well as a worsening outlook for the global crop, analysts said on Monday. Russian wheat with 12.5% protein loading from Black Sea ports for supply in August was $267 a ton free on board, FOB. At the end of last week, up $13 from the previous week, the IKAR agriculture consultancy said in a note. Another consultancy, Sovcon, recorded a $13 rise to $268 a ton, adding that barley was up $9 at $233.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.